What if I told you the new bill Congress just passed could help you pay less in taxes and supercharge your retirement? Hi, I'm Andrew Rafal, the founder and CEO of Bayntree Wealth Advisors, and Congress just passed the One Big Beautiful Bill Act of 2025. And while it doesn't directly change retirement account rules like IRA contribution limits or Roth contribution income limits, it does create new opportunities for strategic tax and retirement planning. So here's what we're going to do. We're going to break down the key changes and explain how they may impact your wallet, your retirement strategy, and your charitable giving. Number one, lower tax rates equals more Roth conversion opportunities. So the individual federal income tax rates from the 2017 Tax Cuts and Jobs Act are now permanent. Why does this matter? Well, lower tax rates make things like Roth IRA conversions more favorable. A Roth conversion is when you move funds from a retirement account like a traditional IRA to a Roth IRA. You pay taxes on the conversion amount today, but then those funds grow tax-free within the Roth IRA. And when you pull them out, there is never any taxes on them, and there is no required minimum distribution. So with these lower rates locked in, you now have a longer window to strategically convert your retirement funds, taking advantage of the lower brackets and minimizing your long-term tax burden. Number two, the higher standard deduction. So starting here in 2025, the standard deduction increases to $15,750 for individuals and $31,500 for married couples filing jointly. This is great news for taxpayers. A higher standard deduction lowers your taxable income, which means you stay in lower tax brackets. And remember, for those of you 65 or older, you get an additional $2,000 if you are a single filer, and for joint, it's $1,600 per qualifying individual. That means a total of $3,200 for those of you filing jointly that are both 65 or older. So for retirees, this creates an ideal environment for tax-efficient Roth conversion strategy conversations. By freeing up more space in those lower buckets, you can convert more funds to the Roth IRA without bumping up into the higher tax brackets. Number three, tied into this, there's an extra bonus. There's an extra deduction for seniors. If you are 65 or older, you'll receive an additional $6,000 added to your standard deduction from 2025 through 2028. For married couples where both spouses are over 65 or older, that's an extra $12,000. But here's where it gets a little tricky. This deduction starts phasing out at higher income limits, $75,000 for individuals and $150,000 for married couples filing jointly. So if you're considering a Roth IRA conversion, you're going to need to carefully balance your income to avoid losing this valuable deduction while optimizing your overall tax strategy. Number four, the SALT deduction cap raise. This has been a battle the last few years. The state and local tax deduction cap, more commonly known as SALT, has been increased to $40,000 through 2029. This cap will adjust annually for inflation, and if you itemize, this higher cap gives you more room to deduct property taxes and state income taxes. So for those of you in higher tax state, this can be a significant change for you. This increase also creates more opportunities to offset your taxable income, giving you additional flexibility to execute Roth conversions without triggering higher tax brackets. Number five on our list, charitable giving incentive. So taxpayers who take the standard deduction can now deduct up to $1,000 in charitable donations if you're filing single, or up to $2,000 for married couples filing jointly. So think about this. You've been, over the last few years, a lot of you have been doing the standard deduction. You've been still donating, but because you don't itemize, you haven't been able to actually get a deduction for that donation. Well, now they've increased that from $0 to up to $1,000 to $2,000. So if you're thinking about charitable giving, this new deduction creates another powerful level to optimize your tax and retirement strategy. So I know we went through a lot. There's a lot of things in here that you can take advantage of. In summary, while the One Big Beautiful Bill doesn't directly change retirement account rules, it creates these valuable opportunities for Roth IRA conversions and just really smarter tax planning thanks to the lower tax brackets, the higher deductions, and some of these new credits. At Bayntree Wealth Advisors, we're here to help. We can help you analyze your current tax bracket and eligibility on some of these benefits. We can help you plan for strategically converting retirement funds at the lowest tax cost, and really more than anything, help you preserve more wealth for you and your family. So right below, click the link to schedule a call with our advisory team. We're here to just make sure that you're on the right track. Thank you for watching. Don't forget to subscribe. Forward this on to somebody that you might find value in it. Appreciate your time. Happy planning, everybody.